Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Nvidia unveils next generation of AI chips in a bid to entrench their market lead, as well as that Opec Plus agrees to extend deep production cuts into next year, and finally, Netanyahu shrinks away from ceasefire plan as far-right ministers do revolt. We've got lots to talk about on the charts also, but lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure to subscribe. The first article we'll talk about is to do with Nvidia and AI chips. Now, Nvidia has now officially announced their next generation of AI-focused processors. This comes in a surprise move, which comes only 3 months after its most recent launch, with the predecessor to the new Rubin chip still being in production after being announced in March. Now, I honestly was quite surprised by this most recent AI chip announcement, as of course, I think only a few weeks ago we were talking about the last chip Nvidia had just announced, and that chip, of course, being the Blackwell chip, which was being discussed by the likes of Amazon and other tech giants as they kind of sought to find a way that they could integrate this new technology into their workflow and basically their systems. But here, of course, we have Nvidia coming out once again and almost forgetting about that kind of generation of Blackwell and now focusing on the new generation of chip called Rubin. Only 3 months, as I said, from that last announcement. Now, why this is also quite surprising is, of course, when we last spoke about the Blackwell chip and, of course, its predecessor to that, we were kind of commenting on the fact that this kind of short time frame between chip announcements was actually creating quite a large problem for Nvidia, with Nvidia struggling really with the kind of lag time between the chip announcements and the actual time that it takes for the chips to be produced and then shipped out and then integrated into a company's workflow. So what was kind of happening was the previous generation 2 Blackwell chips was something which was ordered by most of these tech giants such as Amazon. However, the issue was that whilst the kind of chips were in production and still in the process of being shipped out and that kind of thing, the Blackwell chip was announced, and what Amazon basically realized was that they would rather integrate the Blackwell chip than the kind of previous chips to Blackwell, which they'd actually been looking at and were kind of in the process of buying and shipping to their kind of tech headquarters. Now, ultimately, this kind of latest announcement for the Rubin chip seems to be adding to that same problem. And I think the key thing that will be interesting to watch and see how Nvidia actually copes with it is how Nvidia then copes with the number of companies which maybe now won't actually buy the Blackwell chip, which still is in production and still hasn't been shipped out to consumers. The kind of key tech firms which are buying the Blackwell chip, such as Amazon. It'll be interesting to see how Nvidia does respond to that kind of lag time, as now it's likely that certainly some tech giants and that kind of thing will actually avoid buying the Blackwell chip or cancel their orders somehow, or postpone their orders and switch those orders to actually buying this Rubin chip. Now, a key thing to, of course, preface and note is that this Rubin chip is not being expected to start shipping until 2026. So still, that's quite some time. But nonetheless, when you're buying these very expensive computer chips and integrating that into all of your systems, you have to factor in the kind of costs of doing that, just the process of implementing that, not only the cost themselves of the chips and all the kind of extra work that's possibly also going to be kind of postponed until those chips can be integrated, and the possible issues that may come up with them. So the kind of added costs of always buying new chips is something that all of these tech giants are going to have to start thinking about, as we've already started to see with Amazon. And so after this unveiling, I think the key thing that we need to keep in mind is how will Nvidia respond to this? Because if Nvidia also continues to kind of unveil these next generations of chips, which are of course focused to AI, that's kind of been the key focus of Nvidia with these chips, ultimately, how are tech giants going to respond, and how is that going to affect Nvidia's revenues? We know that Nvidia is trying to respond to certain changes in demand by producing chips which require less power and that kind of thing, and this is kind of going down that route. But ultimately, this issue is one which Nvidia is really going to struggle with, because it basically is forcing Nvidia to not work. It's forcing Nvidia to not kind of expand on their research and development, and it's forcing Nvidia to just focus on production, which is always a kind of hard thing to do in the development team. So I think this is definitely an interesting topic to cover, and of course it's always important with regards to the AI industry as well, as really Nvidia's been the kind of key base and foundation for the AI revolution. As we have to remember, whilst these language models are being produced by the likes of OpenAI and of course Meta and Google and other tech giants, ultimately what these tech giants are using to actually build those language models is the chips that Nvidia are producing and other chip manufacturers, but Nvidia especially. And so that's why we always talk about Nvidia. That's why we're always talking about these AI chips and that sort of thing. And ultimately, it's an interesting stock to track. And I think with the massive kind of gains seen with Nvidia stock over recent months and last year, ultimately any news to do with Nvidia is just so important to cover. With this move being a part of a wider reveal of Nvidia's next wave of products, the announcement is unexpected, however, and highly shocking, simply because the predecessor to Rubin, named Blackwell, hasn't even started shipping to customers. The move, however, is seemingly representing how Nvidia is ultimately racing to entrench themselves as the most dominant player within the industry of AI processing power. The recent surge in popularity of AI and the growing unmatched power offered by Nvidia has led the tech company to fly to high ranks in the ranks of the world's most valuable companies. Nvidia's CEO Huang told the audience that a new computing age is starting, as when he unveiled the new generation of chips and products. The Rubin chip will start shipping in 2026, and the technology promises better improved power efficiency in an effort to address the growing worries over increased power usage. Sorry about that. But yeah, ultimately a very important topic to cover, and it'll be interesting to see how Nvidia does kind of cope with these demand issues as well, despite producing such amazing technology. So keep your eyes on anything to do with Nvidia and other kind of chip manufacturers within the AI space as well. That's all to talk about in this article. Next article to talk about focuses more on the topic of oil, with OPEC Plus agreeing to extended production cuts, basically. Now, the OPEC members have now agreed to lengthen and deepen their cuts in oil production. This comes in a new move which could see oil production cuts lasting all the way until the end of 2025 in a wider effort to increase prices. Now, we have spoken previously about OPEC production cuts. However, this kind of isn't one of those topics that we're covering every month, simply because these meetings, as mentioned actually in the article, often biannual and that sort of thing, and so we really don't see these meetings all the time. Ultimately, though, every time that we do talk about OPEC, it does feel like we're talking about these production cuts, which have been extended all the way through and since 2022. Now, why is this? Well, ultimately, the kind of weakening global demand as a result of kind of changes in the weather, as well as kind of alternative power sources and just differing issues with economies around the world, has ultimately led OPEC Plus to kind of cut production in hopes of increasing prices, as they're kind of acting as this cartel monopoly kind of thing. And so that's kind of their process of ultimately achieving the profits that they're looking for and the revenues that they need. Ultimately, though, there's also increasing supply around the world, with nations outside of OPEC plus, specifically increasing their kind of oil production and their exports. One of those nations, of course, whilst they don't contribute massively to OPEC plus, or did contribute massively to OPEC plus, was of course Angola, which actually left OPEC plus because they didn't want to agree to these deepened production cuts, and ultimately looking to expand oil production. Why this is also really interesting to note, aside from the fact of course, oil being such an important commodity that we're always looking at in the markets, is ultimately because we do have somewhat of a conflict occurring now within OPEC, with certain nations actually looking to expand production rather than deepen production cuts. And as a result of that, we always have the potential of conflict within these cartels, and as a result of that, we also have the potential for the kind of these groups to fall apart, and that will have dramatic impacts on markets as well. But we'll get straight into the article, with the move being in response to global weakened demand for oil, as well as increased supply cuts from other parts of the world. The cuts, which they are looking to extend, began all the way back in November of 2022, and the most recent meeting has now seen the oil group pledge to keep more than 3 million barrels a day of crude oil off the market until the end of next year. Some nations are part of the group, however, in fact, have agreed to bring back a small proportion of its current production cuts, with Saudi Arabia, Russia, Iraq and the UAE all agreeing to unwind some voluntary cuts. The Saudi oil minister also noted that a wider group of OPEC plus wanted to actually increase production, with this including Russia and Kazakhstan. However, this move depends on the state of the global economy and interest rate decisions, of course. That's all to talk about in this article, though. Make sure you're keeping up to date with oil news. Last article to talk about is in reference to geopolitics, and more specifically the Middle East, with Netanyahu now moving away from the US-backed plan to end the war in Gaza against Hamas. This comes following the latest revolt within the ruling war coalition government, which is now clashing with the White House, who Netanyahu looks to maintain support from, with the Israeli war cabinet agreeing yesterday evening that the agreement to completely and permanently halt the war in Gaza would be unacceptable. The meeting saw both the pro and anti-deal coalition partners threatening to leave the coalition government. Following such talks, the Netanyahu office released two statements making clear that Israeli operation in Gaza would continue until Hamas is destroyed and hostages were released. This conflicted with the words of Joe Biden last Friday, which took issue with such war objectives and called for a ceasefire, which the US has backed. Biden's reasoning being that he believes that Netanyahu's goal of total victory was an unidentified notion and Hamas was already militarily destroyed. Now, of course, we've been covering this conflict since October the 7th, and it's had dramatic impacts on the Middle East and especially world tensions, which has played greatly into the way markets have moved, of course, with that specific commodity of oil being greatly affected by this conflict, with the potential of a regional war breaking out being the key topic of discussion, of course, on this channel. Now, ultimately, this kind of conflict, which is now growing between the US and Israel, definitely leaves way for certain kind of escalations to occur within the Middle East, as ultimately, should Israel lose the backing of the US, Israel is largely kind of losing its defense and losing its protection from its most important ally. And we know many nations within the Middle East are upset with Israel and would likely then engage militarily with Israel, with the likes of Hezbollah, of course, whilst that is a militia spanning across numerous nations, the links between those Shia militia groups and Iran especially does leave way for a regional war to take place. So definitely keep your eyes on this article. Keep your eyes on this topic, and of course this article was very important to discuss. That's all to talk about in the articles, though. Next to talk about is the charts. Whilst we have spent quite a bit of time there on the articles, of course, I felt it was important, just as a result of the significance of all that news, and whilst we are seeing quite a bit on the charts today, we have to kind of also contextualize the stuff that's happening around the world. Now, to begin with, like always, we're on the US 30, more broadly talking about US indices as a whole, and ending off last Friday. Whilst I wasn't able to make a morning market briefing, sorry about that, ultimately the US 30 has moved in some very significant ways, ending off the week with a significant bullish push to the upside after price seemingly reacted to that 88.6% Fibonacci retracement level. And whilst we generally by the strategy which Wildwood Capital kind of looks at, whilst we generally don't observe that kind of 88.6% Fibonacci level to kind of be that key liquidity, the key level for price to bounce off, ultimately we did see a move from that level, with price swinging to the upside after interacting with that level somewhat, and now price is of course has now pushed actually above this key liquidity zone that we previously noted as an area which price may kind of use for support. Now, why this move is of course significant is because we've seen a very significant retracement and sell-off in the US 30 over last week, with Monday the 20th really beginning this large sell-off, with that being continued as we headed into last week, and where we then continued this sell-off to the downside. The question now is of course whether this retracement is over and whether price will now be ready to continue this push to the upside and make new all-time highs like we've seen on other US indices such as the US 100 or S&P 500. Ultimately though, we know the US 30 kind of moves differently sometimes to the likes of the S&P 500 just as a result of kind of differing different stocks existing with them. So definitely keep your eyes on the US 30 and definitely look out for a ranging motion, or are we starting to see momentum come back into the market? Next to talk about though is the dollar. Which in fact is kind of ranging at the moment, not really making any key moves, but ultimately is kind of just ranging about, consolidating somewhat, as we can see here, with price bouncing twice off this key liquidity zone and really not moving too much to end off the week. And so as we enter the new week, of course, we're looking to see whether price will eventually make its way down to this key liquidity level, which lines up with this minus 27.2% Fibonacci retracement level, as ultimately the recent double top that was formed on Wednesday last week did once again interact with that 78.60 Fibonacci retracement level, and so it would make sense for price to continue this sell-off to the downside and reach these lower levels of liquidity. Next to talk about is Euro USD, which like the dollar is ranging a lot recently, has ranged a lot recently, ended off last Friday with a great deal of volatility, spiking to the upside and then downside, but really has stayed within the same range that we've seen since mid-May, so not much is happening actually with price. At the moment though, price is sitting within this key liquidity zone that we've noted a few times, yet price hasn't actually really used as a kind of bottom or resistance level, and really has just existed and consolidated within that area. Of course, the key target still remains at that minus 27.2% Fibonacci extension level, so keep your eyes on Euro USD. Next to talk about is pound yen, which retraced towards the end of last week on Thursday, and actually on Wednesday really. The retracement started after this slow long grind came to an end somewhat at these all-time high levels around the 200 yen for a pound mark. This sell-off though has seemingly come to an end, as on Friday and Thursday price found the liquidity for price to continue back to the upside. Price interestingly didn't interact with this 38.20, coming very close, arguably interacting if you take this kind of previous area of accumulation and distribution and line that up with that 38.20, but ultimately this was kind of a harder one to judge, and price is now seemingly back on this swing to the upside. So keep your eyes on pound yen, as the moves are just insane at the moment. The amount of bullish volume is absurd, and to start off the week it'd be interesting to see whether price can break these all-time highs that were recently made. Next to talk about is Bitcoin. Not much to say on Bitcoin. Price is kind of consolidating for the moment, but staying ultimately above that 66.5 thousand bitcoins, no, $66,500 for a Bitcoin price level. And at the moment, if we're looking at it kind of from a technical and price action perspective, you could arguably say that we're kind of forming this bullish flag for the moment. So definitely keep your eyes on Bitcoin, as there's lots of opportunities obviously coming about at the moment with ETF talk, as well as the effects that the Fed's rhetoric is having. Next talk about is gold, which is once again utilizing this lower level of liquidity and key area of support. It'll be interesting to see whether price does react to this level once again, as we've seen 2 times before, or in fact will price now finally break below this level and push down to this Fibonacci extension level near and around 2,290, or in fact we now ready for this continued swing back to the upside. Keep your eyes on gold. Lastly to talk about is oil, which basically we referenced twice already today, which sold off significantly ending off last week. It really will be interesting to see how oil does respond this week to the recent talks to do with Opec Plus, as well as the increased tensions within the Middle East. So certainly keep your eyes on oil as we remain around this bottom level of $81 a barrel. That's all to talk about on the charts though. Lastly to talk about is the economic calendar, where we're getting a lot of very important data this week, so make sure to listen out for these key points. Firstly, we're receiving the US manufacturing figure, as well as the German unemployment rate figure and the Aussie GDP growth rate figure. Followed by that, we're receiving the Bank of Canada's interest rate decision, as well as the US services figure, as well as the Canadian balance of trade figure, and followed by that, we're receiving the ECB's interest rate decision and press conference. So a very important figure there for the Eurozone and Euro basically. Followed by that, we're receiving the Eurozone's GDP growth rate figure, as well as the Canadian unemployment rate figure. And to end off the week, and arguably most importantly, we are receiving that US NFP figure, as well as the ECB's President Lagarde's speech. So make sure to listen out for that as well. That's all to talk about on the economic calendar though. We've got lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading week, but that's all from us at Wildwood Capital. Have a great one. See you later.